Hello traders. So we can see on the Nifty spot that we have 5 days of rally behind us starting on 1st of October. Good start of the month, by the way. Now the question is, will this rally continue ahead or not? Because in the past we have seen the last couple of months where markets have shown us promise on the upside, and then suddenly there is a selling pressure, and rather than a shallow pullback, we have a much larger and a deeper pullback, which probably does not allow the trend to extend further north. Even this time, even last time, what we saw was a much deeper pullback. This time what we have seen is a little bit more surprising. After the first, second and the third day, we had two inverted hammers back to back, and it did seem that probably we could consolidate, dip a little bit, and then go forward. But in the last 2 days, markets, the way they have rallied, it's good to see that the strength is continuing on the upside. In terms of trend and momentum in the daily time frame chart, things are pretty much positive. Surpassing of this level, the previous swing high, which is 25,447, in round figures, I will say 25,500. The day we close above it with a positive candle, I think it will be good for the market overall. The structure of the chart will improve. Although if you look at the weekly time frame chart, in terms of trend, things are fine because the displacement of moving averages is perfect, no problem. But the momentum is pretty much sideways. It's pretty much sideways. I think market will have to do a lot more to get the momentum and trend both in alignment together. When that happens, then I think we will see much more better results in our trading. Now, the sector which has actually given the bullish impetus to the market in the recent times, in the last few days, is Bank Nifty. Now, if you check Nifty and if you check Bank Nifty, it is good to see that the heaviest of the sectors, because Bank Nifty enjoys the highest weightage in Nifty as an index, and you can see that it has been able to surpass the previous high over here. I'll just mark it for you. And even though there was a resistance, it has been able to surpass it, which is a good sign. Yes, in short term, we are slightly overstretched, slightly, not much, but it is fine. And the good part is even the trend has improved in the weekly time frame chart, because initially, yes, the trend was up, but we were within a range. That range has been broken and the momentum has also improved. So yes, good sign for the bulls. Going ahead, one surprising thing is the sector which was underperforming and probably which was responsible for the entire market to come down. Although there were many sectors like IT also, but like private banks also enjoy a very high weightage. It has improved a lot. Not just the displacement, but even the momentum has improved, which is a good sign. Okay, in the daily time frame chart, in the weekly time frame chart, in both the time frames, trend and momentum both are in alignment, which is a very good sign. Now, in private banks, there are 4 stocks, actually 3 stocks, which enjoy the highest weightage, but 2 of them are not that great, and the other 2 which enjoy the highest weightage, probably they are improving. So I think as a trader, if you want to trade anything on the long side, you will have to pick your stocks very wisely. If you just pick any damn stock in the private banking sector, assuming that since the sector is going up, my stock will also outperform, it's not going to work that way. आपको देख करके समझ करके फिर stock picks करने पड़ेंगे, ठीक है? Now, initially the sector which actually gave positivity to Bank Nifty, did not allow it to fall further, was PSU Banks, and thanks to the stock SBI, which was rallying a lot. Now what we can see over here is a little bit more interesting. First thing is trend, perfect. Momentum, perfect. No problem in the weekly time frame chart. But what has happened in the daily time frame chart is, so far the trend is fine. Momentum, so far it's fine. But now there is one thing which we need to understand. I'll convert this chart into a line chart. You can see that we have 3 consecutive higher highs in price, and we have 3 consecutive lower highs in RSI. Now, is this a NCD, negative classical divergence? The answer is no, it is not. It is not a negative classical divergence till the time price starts to revert on the downside. This is what I've shared with in one of my videos. In my previous video, I've shared it, which was on RSI. So till the time that does not happen, it's fine. But this particular signal surely shares an important information with us that initially when the rally was going up, the speed with which, the momentum with which prices were traveling on the north side is slowing down. Okay. So as a trader, if you're holding anything long or long positions in the PSU banking space, you can continue to hold them. There is no problem. The trend is up, but momentum is slowing down. Energy pack. Well, energy pack is something which you need to pay attention to because things have started improving. Yes, in terms of candles, you will say that there are no great candles over here except 3 weeks back. I do understand, but the displacement of moving averages has improved. RSI has started improving. That's the first sign. In the daily time frame chart, although price candles are not that great, so I think we need some couple of big green candles which will try to improve the overall state of trend in the daily time frame chart. Once both the time frames are aligned together, you will see something really good happening with momentum on the upside in energy pack. Auto pack. Now, auto pack has been in the limelight since quite a while, since many weeks. It has been going up. Even right now, it is in an uptrend. Momentum is up, but now it is slowing down. If you see the price action of the last 2 weeks in comparison to previous few weeks, you can see that the sector is slowing down, and the same thing is visible in the daily time frame charts. Now, as a swing trader, as a momentum trader, you would probably say that if the trend is up in the higher time frame charts, and I'll try to buy the pullbacks in the shorter term time frame charts, theoretically it's fine. Theoretically it's fine, and probably few stocks might rise. That's okay. But you'll have to understand one thing, that in the auto pack, what has happened is there are, I think, 5 to 6 important stocks in the auto sector. There are few stocks which have already run up way too much. I would like to stay away from these stocks. And the stocks in the auto pack which have, after a rally, which have significantly, I'm using the word significantly, have retraced, and then if they are trying to go up, only then I will try to take an entry. Otherwise, probably if you're trying to take an entry in a stock which is overstretched here, chances of making money is slightly less. Okay. Consumer durables. Consumer durables, I think it's like the displacement of the moving averages in the weekly time frame chart is okay, but momentum is negative. Trend is also negative in the daily time frame charts. Even the candle is negative. It's an inverted hammer with a upper wick. RSI also, seems to come out of a hibernation. So overall, a weaker sector according to me so far. Consumption pack. Consumption pack improving, trying to improve. Trend strong, pretty much strong. Momentum not that great. It's trying hard, but it's not that great. If this gives a pullback on the upside, should someone go long? Probably, according to me, it's a good pullback, but when the momentum of the higher time frame chart is not with you, it is possible that the long trade which you might initiate could go higher, but it can be choppy as well. Okay. So yes, theoretically it's bullish, but doesn't have extreme high momentum in the higher time frame charts. Finance. Finance seems to be improving in terms of trend. It's a good sign that it has been able to surpass this candle. RSI improving, trend fine, RSI in the daily time frame chart fine. Only thing is that we have surpassed this level, okay, in the weekly time frame chart, but in the daily time frame chart, I would like to highlight that there are a couple of wicks over here. So if instead of candles where we have wicks, if we have full bodied candles, the confidence in the sector will surely increase. FMCG. Now FMCG as a sector in terms of trend negative, RSI negative in the weekly time frame chart. Daily time frame chart trend negative. Price is trying to give a pullback. It's trying to improve. We do have a bullish Harami candle, a bullish engulfing pattern over here, which is a good sign. Probably we might see some pullback in the FMCG pack. But theoretically, if the larger time frame is bearish, then the pullback may not live much longer. IT pack. IT pack is trying really hard to give a slightly larger size pullback. Is it trying to bounce back from an important support? The answer is no. We have already broken that support. Now, this is a bounce back which is pretty sharp in nature. The bounce back is pretty sharp in nature. You will also say that there is no negative candle over here in the daily time frame chart. I would say yes. But although in terms of trend in the weekly and in the daily, we are still in a downtrend. In terms of momentum, also in the weekly time frame chart, we are negative. So strategically, it seems that IT is a weak sector so far. And this is just a pullback, nothing more than that. Metal pack. Metal pack, stronger sector. Very nice momentum, very nice trend. Confidence है इस sector में. If someone would like to go long. Only thing is, if you check the price action and if you check the moving averages displacement, both don't match each other. What I'm trying to say, what I'm trying to make a point over here is the trend is up. Momentum is up so far. I'm using the word so far. But there has been one small change in the metal pack, which is we have 3 consecutive higher highs in the metal pack over here, but we have 3 consecutive negative highs in the RSI. Now, theoretically, is this a negative divergence? The answer is yes. After 10th October's close, Friday's close, it's a negative divergence, but at times, listen to me very carefully, at times in a sector which is in a bull run in the higher time frame charts, the negative divergences do go for a toss. So we will need some basic level or something like that where we can decide and take a decision that something can go wrong. According to me, that particular level can be in case if the price closes below Thursday's low and then Wednesday's low, which is probably 8th of October and 9th of October. If price starts closing below this, then the entire structure in the daily time frame chart will get degraded and the momentum with which, the velocity with which price is going up will come down. So this is something which you need to understand. Infra pack. Infra pack, I would not give any comments. Overall, I think trend is fine. It's up. Displacement of moving averages is up. Completely sideways in higher time frame, even in the daily time frame chart, nothing interesting. Okay, so I'll keep it on the sidelines. Pharma pack, every now and then, whenever it tries to improve, there is some sort of selling pressure on the upside every now and then. So again, this time, do we have any new things? I have no clue. We'll have to wait because the stock with the highest weightage in the pharma pack generally crashes very badly. If you go and check the constituents in the pharma pack, you will understand मैं क्या बोलने चाह रहा हूँ. Every time the pharma tries to give a rally, it's thrown down. Again, over here, it's thrown down. Over here, I think thanks to the American president, unnecessarily he poked in between. Otherwise, the rally was pretty nice. So things can happen, but so far, I think the overall sector is still sideways and weakish. Not interested to participate on the upside. PSE. PSE as a sector, now in the weekly time frame chart, slowly and steadily, quietly, no fireworks, it's improving. RSI also pretty nicely, smoothly, it's trying to go up. Good sign. Daily time frame chart also fine. Only thing is the candles over here need to improve if a bullish trader wants to have some confidence in the sector. Realty pack. Now realty pack, something interesting has happened. The trend is down in the weekly time frame chart. We will try to concentrate more on the weekly time frame chart. The trend is down. Okay. The trend is down. The displacement of moving averages is down. And if we convert this chart into a line chart, we have 3 consecutive lower closes. Now, this 1, 2, and 3. So 2 is lower than 1 and 3 is lower than 2. But if someone goes and checks the RSI of the real estate sector, you will understand that we have higher lows. So every low which has been made is higher than the previous low. So is this a triple positive divergence, triple classical positive divergence? The answer is yes, it is. Now, in terms of candles are also great. I think the first sign which will tell us that things are improving is, I think, prices trading above the previous week's high, which is 901, but I will like to give it some little bit of place to breathe. So once we start trading above 910 in the real estate sector, there is a decent probability that things can improve. That is one thing. Structure in the daily time frame chart is not that great. I can understand. Structure is not that great. So once we get some leeway from 910, a trader should start watching this. Then the next step should be that we should surpass this high and the trend should continue like this, and overall structure should improve. But first thing is that we should start trading above 910 in the weekly time frame chart, and it should happen as soon as possible. Okay, so let's wait in the next week what happens. India defense seems to be improving. The trend is up. Momentum is trying to improve, not great, trying to improve. A daily time frame chart is okay. Trend is up. Momentum is okay, not that great. There is a chance that things can improve in the next week. So I think we'll have to wait and watch for next week's price action. But it's surely a sector which, as a trader, you need to keep watch on. Midcaps, things are trying, price is trying hard to go higher. But overall, if you check, it's like very wild swings in the midcap. Not a very desirable chart to trade and make money, because as I say that as a trader, you need consistent uptrend and consistent momentum, something like this and this, where prices, once they start going up, the pullbacks are shallow and the rallies are bigger. But over here, you can see the pullbacks are much, much deeper. It's not very easy to make money here. So things can improve, but we'll have to wait to see what happens in the next week, and we should surpass this level, which is 59,284. Strategically, the chart is improving, but volatility is very high in the mid caps. So that is what we need to understand. Now, overall, after analyzing with all of you the entire sectoral indices, it seems things are improving. In the mid of the week, somewhere in 7th October and 8th October, when it seemed that things can deteriorate, bulls came back, and this week we have seen that prices have rallied on the upside despite some sort of weakness. In case if there is no negative announcement from the US, and if price continues to go higher, surpasses 25,450, 25,500, will be a good sign. One thing which I liked is private banks have improved. PSU banks are slowing down. Metal pack uptrend, strong uptrend, slowing down a little bit. Real estate trying to bottom out. Trying. The word is trying. IT pack is negative, nothing great over here. Pharma pack also nothing great over here. Auto sector, few stocks slowing down, few stocks are good. Energy pack is also improving. So it's a mixed bag. As a sectoral indices, I would say it's a mixed bag, and you will have to understand it's not a long only market. If you're a derivatives trader, your portfolio should be like long short, and if you're a long only trader, you will need to know which sectors are outperforming, and within those sectors which are the stocks which are outperforming, and only time your trades accordingly. All right, so I hope these videos are making some meaningful impact in your own analysis as well. Trade wisely. Thank you.